Good morning, everyone, and welcome to the European Crossover webinar. And sorry for the delay. I'm just going to scoot something out of the way and turn this off. And going to take a look at where we are right now. We've actually seen the S&Ps that actually, I was taking a look on this, I stepped away and I didn't keep track of the time, so sorry about that. We actually made a run up here to 3203, and I was a bit surprised that we had opened up a little bit stronger here in the Asian session on Sunday. Put this up in here. We paired back, but I was even a bit surprised. We had to get a little decent pullback here at the time. Although it was down to 31.82, but I thought, okay, we made up here to 31.96. I saw this, and I was a bit surprised to see us make it all the way up here. Bit surprised to say that at the least. And with that, we've seen the euro dollar going and make a move up in here. Right up in here in the 1337, right here, we made another run up in here. It was actually, for me, I was looking at the futures, but it looked like we were about ready to take off again here in the euro. Simply didn't happen here. Thought we might go in and break above here. We are above if you look on a very short-term trend line, we pushed a little bit higher. If you're looking on a very short, like on a 5-minute chart, I thought we might start to go and take off, especially with where the S&Ps are at. Simply didn't go in and happen. So despite the higher move that we've seen here in the S&Ps, it still hasn't translated as much to as far as an FX. And let me go in and pull in the data that we're going to have for today. We did go in and have German wholesale prices. And that's going to be it. Even going here into the States, we don't have anything until we roll into, technically for us, we have New Zealand data, but in our time zone, but really rolls into the next day. So we really don't have anything available here. And on the dollar decline resumes as investors look to economic data. The US dollar edged lower on Monday as investors looked to incoming global economic data and US corporate earnings to gauge whether the market's guarded optimism on the economic outlook is justified. The greenback had ended its third week of losses on Friday as investors bought into the risk-sensitive currencies on bets that the worst of the pandemic's sweeping impact was over. The index that measures it against a basket of major currencies has slipped 0.2 by early deals in London to 96.41. Coronavirus cases surged over the weekend as Florida reported an increase in more than 15,000 new cases in 24 hours, a record for any state, surpassing a peak hit in New York in April. We expect the broad dollar decline to continue, supporting emerging market FX. And to see euro dollar at 115 in 3 months, said Lars Spars. This continues to be a recurring observation, with markets not being weighed down by the current host of problems with coronavirus and EM in some U.S. states, not least the still likely to weak current earnings. Merkin also added that the market's focus is on direction rather than the level of economic activity, being supported by fiscal and monetary policy. U.S. inflation figures for June are due on Tuesday, while retail sales, a key gauge of consumption, are released on Thursday. The euro rose to 13.28, maintaining its slow uptrend since late last month. Looming large for the single currency was a planned European Union summit on July 17th to 18th, where leaders need to bridge gaps on long-term budgets. Investors will also watch whether an agreement on a proposed $750 billion euro recovery fund for the bloc emerges. The British pound gained 2/10 to 26.41, edging near its three-week high of 26.68 touched last week. We've seen a rapid rebound of a rapid decline in various economic data, but looking ahead, the improvement could slow, or we could see a deterioration given the second round of infections, said Masafumi Yamamoto. A weekly gauge of consumer confidence in Australia has dropped after a spike in infections in Melbourne that could also be echoed in the U.S., where the magnitude of the outbreak is much larger. The dollar gained slightly against the safe haven yen, staying near the two-week lows of 663 set on Friday. Investors are looking at China, where economic recovery is gaining momentum as the outbreak has largely been contained. And we'll see if the morning bid is out. Bear with me. And it is. And we'll just touch on this to start the week. It's a big week. Central bank meetings in Japan, Eurozone, Canada, and several emerging markets. July 17th to 18th, the European Council meeting summit that they may determine the fate of a proposed EU recovery fund, and more than 30 S&P 500 companies and over 50 from the Europe's stocks 600 are reporting second quarter earnings. There's also the usual rush of data from Chinese exports and gross domestic product to UK jobless and monthly GDPs that could show the economy has troughed out. Meanwhile, the markets are acting Pollyanna again today. Stocks looking set for another rally. European shares are opening 1.5% or so higher. Wall Street is marked up 7/10, and China's mainland shares have returned to a 5-year highs after Friday's blip, which saw them snap an 8-day winning streak. Record new COVID infections in the U.S. Many states have backpedaled on reopenings and rising cases across the big developing economies and new clusters in places like Australia. Actually, let's focus on the positive news on Friday from Gilead's drug to treat coronavirus. Even the Disney theme parks in Orlando have reopened. So the week's most interesting names are the financials: J.P. Morgan, Citigroup, and Wells Fargo, Goldman Sachs, U.S. Bancorp, Bank of New York Mellon, and the FANGs, which probably are benefiting during the lockdown. So really no real good news here, or specific news, just a generalization. So with that, we'll move on here. And we're just a little bit firmer here in gold. We can go and take a quick look there. We had a decent little pullback here in gold, but you can see here we've just been steadily rising, but nothing, as they used to say, or as they say, nothing to write home about here at this point. A little bit of a bounce back. But nothing outstanding or to grab your interest. Looking at the indices, at least on a 30-minute, we do have a little bit of a gravestone doji here in the NAS. But, and not a bad little setup. You're seeing a little bit of a pullback, but the real action is going to take place once we get into cash equity open here in the States. So with that, we're going and move into the analysis. So the last 5 trading sessions in the euro have been marked with indecision and non-committal moves. Resistance will be 1373, so a little bit further push here until we see, and you can see this is the real move here. And when I say that, you can see here it's been up, down, up, down, up, and a little bit higher. And the resistance isn't going to come here until we really get here to get some real movement. So it's going to come in right there at 1373. A daily close above that would allow momentum to establish. Support is going to be 1231 with a daily close below 1216 to show further downside direction. So as I mentioned, support would come in right there, just right there at 1231. And you can see here, at least for today, we're trading in a very tight range. So for now, 1373. And 1231. Moving on to the cable, boy, look at this. This is just, we are just stuck right here. Look at this. A gravestone doji, a spinning top, and we haven't closed the day, but look, another gravestone doji. Amazing here. Hang on. So cable closed at the weekly level of 2602, yet has been unable to secure upside follow through. Resistance is going to be 2683. A daily close above that will allow immediate challenge of 2742. Support is going to be 2514 with a daily close below 2458, negating the upside. So if we do get a daily close below 2458, that would go and negate this upside push that we have, because we closed at 2602. Looked like they're ready to go in and launch. We closed just above that key weekly level. Looked like they were really ready to launch and on their way. And then we came back with this gravestone doji. Then on Friday, we had a spinning top here. So it certainly looks like they're going to pull back. And we made another run up here. And not really much progress, although we are holding up above 2602. So the Aussie remains bullish, although has been the although has been the entirety of the week, or has spent the entirety of the week spinning its tires while watching equity markets. So you can see here, this whole week we were just really going nowhere. Like I said, just spinning the tires up, down, down, just like I said, not going anywhere. Resistance is going to be 70.02 with support at 68.62. And onto the Kiwi. So the Kiwi, following a 6-day rally in 7 sessions, has been stymied over the last 2 trading days. So you can see here, look at this. 6 out of the last 7 days there was a rally, and then we just got stuck here those last 2 trading days. Resistance remains 65.94 with a daily close above that would spark a move, and a daily close above 66.44 would spark another leg higher. Let me pull this further back. This is our immediate resistance here at 65.94, but a daily close above 66.44 and be off to the races again. I'm not sure that's going to happen at this point, but would spark another leg up. Support is going to be 64.93. So 65.94. $64.93. And on to the dollar CAD. So the dollar CAD extended its rally on Friday, although running out of steam at the level of 36.29. We had that level in place. Obviously, like I said, we had some issues on Friday, but with my electricity, but 36.29, and you can see here they ran out of gas and quickly went and pared back. To start the week, resistance will be 36.40. Well, we're starting the week a bit weak in here. 36.40 with support at 35.38. So really a real tight start to the week across the board in FX, I'm trying to say. Hang on. With this, the euro, the cable, well, the Aussie Kiwi hadn't been moving much, but the euro, the cable here, even in dollar CAD, just some real tight ranges, as I mentioned, to start the week. On to the dollar peso. Now, the dollar peso gave up most of its gains from Tuesday's upside reversal. And you can see here that we had that huge move up here, this upside reversal, and then we spent the balance of the week just giving up all those gains. Well, just like the other majors, we are just dead in the water. Look at this. Look at this range. This is just like nuts how tight it is. But as I mentioned, We gave up most of those gains from Tuesday's upside reversal, spending the balance of the week giving up those gains, I should say. Support will be 22.37. I think we may have just made it there. So, yeah, we did. 22, basically 22. Well, right there it is, right there. There's that low. So it was 22.37, followed by 22.17. Resistance will be 22.61. Let's go move on into the dollar yen. And the dollar yen closed the week sub 107. Support will be 651 with a daily close below that, allowing a challenge to 610. Resistance will be 721. So relatively tight. I mean, if you look at it, you think, well, yeah, that is a tight day. But compared to what we're seeing here, whether it be the peso, the euro, the cable, dollar CAD, it almost looks like the range is a bit wider compared to those, even though it actually is not. But anyway, nonetheless, support's going to be 651. And let's go and move into the dollar index. So the dollar index finished the week lower, although holding support at 96.43. A push into new lows finds initial support at 96.09, although we are holding here in this area. Resistance will come in at 97.06, followed by 97.51. So what we're looking for on a break lower is going to be 96.09. And on the upside, 97.06. And let's go and move on into the cross rates. Oh boy, yeah, they were right. Look at this. Look at this China market is still making a push higher. I had shared some charts on Friday. As to how far this market had moved. Actually, I don't even think I even have those right now. Bear with me. I don't know if we can make it any bigger here. But you can see here, 34.63 is 127% extension. 34.90 is at 38% on this bigger move. Let me see if you see it on the weekly. You see this on the weekly? It's probably a little bit hard to pick it up. But this move was huge right up in here. So 34.63 is 127% extension, and 34.90 is a 38% of this huge move, with 34.89 being resistance. So let me move this out of the way and see where we're at. Oh yeah, I'll tell you what, we can do it this way. I had saved it. Okay, there you go. Makes sense there. Bear with me. So when you pull this back, we're right here in this zone here, and 34.89 is confluence in here. There's a level here with 34.90, the 38%, and 34.63, the 127%. So if we can push a little bit higher, there's some pretty good resistance up here with 89, 34.90, 34.89, then 34.90, the 38%, 34.63, the 127% extension. So still pretty decent little move. I thought we made, well, we barely did tick past these highs, but we're pulling back a little bit. I thought we might see a big jump in here. And I think today is going to be, today and tomorrow, I think is going to be key. Actually, a lot of people think this week is, whole entire week is going to be key, actually. But anyway, that being said, let's go to move into the New Zealand yen. So the New Zealand yen has been consolidating the prior week in a 70 pip trading range. So we had not been going anywhere lately. Upside remains 70.70, followed by 71.28, and support will be 69.30. So we're paring back just a little bit, but still relatively tight range. On the upside, 70.70. And support will be 69.30. Gold pushing up a little bit higher here. And, oh, wow, in the indexes, we are paring back here. We're back at our lows here in the S&Ps. And some pretty good volume, too. Let me just share that with you real quick. So we're back on our lows. And some decent little volume on this pullback here. Here's a NAS. It's going to move on into the Euro Yen. So the Euro Yen finished the week lower, following an inability to close above 21.51. You can see how many times we stabbed up against in here. The pair found support at 21.41, or I should say 20.41. To say 20.41. Support will be 20.14 with a daily close below 1992, triggering a further down move. Resistance will be 21.20, so we're not too far. We've actually made it to 21.21. We kind of pulled back just a little bit, so 21.20 will be resistance. So far, it's holding. And 20.14 for support. Onto the Euro Aussie, and this market has gone Absolutely nowhere. Look at that. Of course, with this big move, it kind of takes things out of context. But even when we pull things back here, you can see we're just not going anywhere. The euro odd continues to lack traction. Support will be 61.48 with resistance at 63.02. A daily close on either side will generate momentum. So we're still pretty much dead in the water on this thing. So 63.02 on the upside. And support's going to be 61.48. Let's go into the Euro Kiwi. The Euro Kiwi secured a footing below 72.16 with the daily close below that, allowing a challenge to 69.88. So support right now is going to be 71.54 with the daily close below that, allowing a challenge to 69.88. Resistance will be 72.51. And you can see here's that 71.54. Right there, 71.54 there. Now that's support, but if we get a daily close below that, that will open a door down to 69.88. Right there. So at least for right now, we're holding this area here, the 71.54. We've kind of made a push higher, but resistance is going to be 72.51. So we're actually pushing up a little bit closer right here. Right there. Actually, we just tagged it. Right there. And actually, it's actually set, well, 2 pips aren't going to make a difference, but it's actually 72.53 versus 72.51. We're going listed for that, but it's not making that much difference at this time. With support at 71.54. Now, the Aussie Yen has found solid resistance at 74.97. You can see here, we've been pressing up against here. Haven't been able to dislodge that as far as moving any higher before falling back to 74.26, which we've slipped back down in here. Immediate support is going to be 73.73 with a daily close below that, below 73.24, turning the pair bearish. Resistance is going to remain at 74.97. Kind of move this in a little bit closer so we can see. There we go. So you can see we've been bumping our heads up against this 74.97, but we're not going anywhere. We haven't been able to break above that. So 74.97. And support will be 73.73 if we do go on. And it looked like we're open to moving lower. So far we haven't at this point, but that will be 73.73. And on to the guppy. So the guppy, after posting a gravestone doji, you see that here on Thursday, followed through to the downside on Friday. You can see that. but we did hold at that 34.32. Finally supported 34.32, and then rebounding 50 pips. So we had a pretty nice move leading over the last week and a half, and then that culminated on Thursday with the Gravestone Doji. We did see some follow through, which found support right there at that 34.32, rebounded 50 pips, and we're just kind of sitting dead in the water for right now. Resistance will be 35.40. We have been as high as, oh, that was it right there, 35.40. Will be the 35.40 with support remaining at 34.32. So and lastly with the sterling odd. Sterling odd closed the week above the resistance level of 81.06, allowing for a challenge of 82.46, which will be resistance. Support will be 80.48. A daily close below that would negate the upside. So, and they're showing the ES hitting, but we had already come off these lows. So, unless someone's resetting the higher. But anyway, that being said, 82.46 for resistance. And support will be 80.48. And we're going to go and take a look at the indexes. Because that's what's driving everything at this time. So bear with me. So let's just take a look at where we stand here with the E-minis. Let's go move in here. And we'll take a look at the 2-hour chart. This was a key area here on Friday, and we did make that push. We kind of sat there, and then we sprung above that and closed, and then we saw this little bit of a gap up in here to start the session. I covered that with you a little while ago because we'd seen a good move in the Asian session, and then a dip off of that, and then resurface. And to me, I thought we may come back up in here, but I was a little bit surprised we jumped up to 32.03, but we did, and henceforth we've gone and come back down. So the only thing I will say right now on this one is a bit of a not quite, because it didn't open up there, but almost a bearish engulfing line. Let me pull this back a bit here. See, it was just a little bit nudged below it. But certainly we saw some follow through here. With that, let's go and move into the 30-minute to see if we can see something here. This. Certainly move up in here, and let's take a look back. This is where the key level is actually, so we didn't quite get there. It would be 3208. Gold's still pushing a little bit hard, 1813. We did go and come back in here. We're still in the buy mode here. There's no doubt about that. And we've rebounded off of this buy mode here. Not buy mode, but I mean the slower exponential moving average. But we're still in the buy mode. A decent little rebound here, 4 handles. Let's go and take a look at the 5-minute. Here's the same day VWAP. Nothing outstanding here in the S&Ps, although I think they're reacting more to the Nasdaq, and we'll get to that. We did go in and see here at 1 a.m. Central Standard Time some decent volume up in here, right here, not bad. And then this pair back. So let's go and move into the Nasdaq now. I think that's what's driving the bus right now is the Nasdaq. Certainly the 2 hour still up here in the stratosphere. Let's go move into the 30-minute. We did cover this just a little while ago, and I mentioned here, hey, we've got a gravestone doji, and we did have this gravestone doji on the 30-minute. That was not a bad setup there. You can see right there where they hold them. Actually, there. Once again, a little bit of a rebound off of this slower EMA. The S&P is actually tagged. There's, I think it went just below it, but obviously we're holding right before. But once again, just like the S&Ps, they're still in a buy mode, and this thing has just been really bananas the way that thing is really taken off. This has really held up very well. Look at that. Let's go and move into the 5-minute. Relatively quiet overall. I mean, we did get this move up in here in the 30-minute. with this gravestone doji, and we did see some pullback, but still overall quiet. We're not seeing anything definitive other than right here on this 30-minute here. Same thing, obviously, with the S&Ps. Let's take a look on the, as far as volume. Some pretty good little volume here off these lows, so a decent little move. Same thing with the S&Ps. Once we got up here, some okay volume. We've just been gently going lower. We looked at the Shanghai index, and we have moved higher, but I thought we might have seen like a big old gap up, and we have not seen that. So let's go and take a look at the gold market. And we've seen this move a little bit back, a little bit higher here since it's been on the webinar. Taking a look at the 2-hour chart here with the gold market. Some resistance right here. Just right there. In 1823. Take a look here on the 30-minute. We have moved into a buy mode here, right there at 1805. Which would have allowed a challenge up to here. Which would be 1814. So you might see the market just pare back just a bit here. Once we get to 1814. We go. And you can see here on the 5-minute, it's been holding here at 2-day VWAP. And we'd sprung away from same-day VWAP. So really had the momentum going forward, but you can see here 1814. We did get this buy mode here at 1805-ish. Happened on that bar, so really you'd be looking around completing that bar, which is probably like around 1808 and change, and you can see the market pairing back 7, and then so I would expect a little bit of resistance as we move up here to this 1814 as far as a partial target. Some volume being taken off. You can see here as we get to up in here, volume is picking up. You can see here as we turned around here at that 1808, you see this buy here. Look at how quickly the volume picks up in here. We did make a run up there at 11, so we did see some volume pick up, and then we just been making a move since then. Let's take a little bit closer look here on the cable. See if there's anything we see here. Looking at the futures, we did kind of rotate from this 2660, so we're off 60 pips. In this case, with the futures, 60 ticks. And Taking a look at the 30-minute, we've just about moved into a sell mode here. Should be at the completion of this hour. And as you can see here, we've broken below 2-day VWAP. So we're starting to pull away. So we'll see if we see anything of any real consequence here. But we have slipped back there. I can't say that there was a definitive setup here, although we did make it right back up in here. And probably was a decent area here. But then again, we are starting out the week. But let's go and take a quick look at the euro. We've challenged this 1346, and this has been key, this 1346. So we've rotated back from that and gone back here. And this is important here. This I was on 1312, I think it was. I was looking at it earlier in the Asian session. Put on here, remains in the buy mode. And I think the risk on this is 1312, if I remember correctly. I didn't mark it. Yeah, right there. That's the risk. 1312 would need to hold, and it is holding above that at this moment. Oh, here it is. The risk is 1312. You see that right there. So this, so we can mark this off quickly. And there it is, 1312 right here is the risk. So if you're going along with this, we held here, look, it held on the defense of this trend line. We took off. Now, we did run out of gas here at 1346, but you can see this is the risk, which is 1312. The low so far has been 1317. You can see here, risk is 1312, breaking the trend line. We are holding, and 2-day VWAP is 1316. Now, this is on the futures. The futures are trading. They're currently trading at a 2. The trade appear to be trading at a 10, a 17, basically a 16 pip trading range, or let's see, 1310, 1327. So basically a 17 pip or 17 tick trading range premium to the spot. But that's where we stand. And thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.